Hello everyone, welcome to this week's weekly market view for Monday the 15th of May to Friday the 19th of May 2023. My name is Vishal. Let's get started. All right, so let's start with the Nifty chart and let's start with the monthly chart like we always do. And if you look at the monthly chart of the Nifty, we are still holding on to this level of demand. There are still no signs of any kind of weakness yet. We are approaching a little bit into this area here. Now you could see this big strong rally candle and a drop candle, which probably tells us that there could be some supply within this area. It's not very clear on the monthly chart. So we'll continue and move to the next time frame, which is the weekly chart. Let's go to the weekly chart. And what do we see on the weekly chart? On the weekly chart, we see a potential level of demand being created here, this rally-based rally. And at the same time, we are more or less inching a little bit further up. We still have this area to cross, which will probably be seen more clearly and more evident on the daily chart. So you can have a look at this. And right now, prices are still within this area here. So unless and until prices break this 18,472 area, the view will still remain a little bit cautious because we are in a supply zone and we are high on the curve right now, which means this could also be an area of distribution where orders are getting distributed, and thereby we might see a little bit of a bigger turn. On the daily chart, your best level of demand is right here, which is currently very far away from the market price, which is 17,422 to 17,319. So these are the key levels on the Nifty to watch out for in the coming week. If we go to the intraday chart, and let me just load the local data here. All right, so let's look at the 15-minute chart. And on the 15-minute chart, we'll just go a little bit on the 30-minute chart here. So there is a key level of supply, and we need to watch out for that level. So we'll just wait for the 30-minute chart to load up. There it is. And if you go into the 30-minute chart, in fact, two levels of supply. We see this base drop. This level seems to be a little bit of a reasonable level. 18,560 to 18,599. This is right above that daily supply level. So just be aware of these levels, 18,510 to 18,000. These are going to be the key levels to watch out for. In case if the daily supply zone gets violated, then more or less these areas will be more or less like trap areas. Right? On the 1 hour chart, on the 30-minute chart, nothing clear here. Maybe we just go back to the 1 hour time frame. The 1 hour chart. Yeah, this is the area to watch out for. 17,961 to 17,879. And there is one area here, which I think we have already discussed last week, was this area here. 17,835 to 17,760. So these are going to be more or less day trading levels, and the previous levels are more or less swing trading levels. All right, let's move on to the next index, which is Bank Nifty. And let us try to see what levels are playing out on the Bank Nifty as well. So let's start with the monthly chart first. So Bank Nifty is coming very closer to the all-time highs, and this is the area where there is a supply zone, and right now it's playing. But what you can also see is that the monthly demand zone has held pretty strong and given us a very strong reversal. Let's go on to the weekly chart. On the weekly chart, we got to be a little aware of this rally-based rally level as we are inching closer to the all-time highs. So what is going to be more interesting now is to get a close above the all-time highs, because usually what happens is majority of the times whenever the market comes to or very close to the all-time highs, then there is a tendency of the market to just possibly, just give a more like a fake out. And let me just show you. Let's see here. So it's not working, but never mind. But what I'm trying to say is this area over here. Let me just show you. Yeah. So what I'm expecting is the market to create new high and a close above this high. So I just don't want the price to go up, just wick out and then come down, right? That will indicate that there is a potential of a false breakout in the market, right? And generally when false breakout do occur, the reversals are pretty strong, right? So you just got to be a little careful and wait for the close above the all-time high to indicate that there will be more momentum coming in on the bank Nifty before prices correct or prices eventually continue to move to the upside. All right, let's move on. Let's move on to the daily chart. Let's see what are we seeing on the daily chart. So on the daily chart, we are coming closer to this level of supply, which is this rally-based drop. Getting there, not yet there, but I believe that on Friday, we did hit a crucial level of supply. Let's have a look at it. Let me just load the local data here. Yeah, so this was the level that I was talking about when it came to the Bank Nifty chart here, 43,808. This is that drop-based drop supply zone. Now, what we need to see on Monday, let me just move to the right-hand side of the chart here. And what do we need to see on Monday is a potential gap down. And if the gap down does occur, that will possibly indicate a pro gap. And a pro gap would also indicate that on that particular day, the gap may not get filled and the prices will continue to move in the direction of that gap. All right. So what is more interesting to see is whether we get to see that level of a gap down. And if the price does gap down and continues to move down, then that can be a good short trade setup potential. But let's see whether that happens on Monday. As per the SGX Nifty, it's indicating that we are going to open gap down. But of course, when Asia opens on Monday morning, then things can change. So let us see how much of a gap down we are going to be seeing on Monday. And if there is a gap down, then prices might just continue to move towards the gap. All right, let's move to the Fin Nifty chart quickly. And on the Fin Nifty chart, we have hit a level of daily supply. We've seen a little bit of a reaction coming here. And a very similar level has also hit on the Fin Nifty. In fact, it has hit the level for the second time. This was more or less the level that was identified by us last week as well. So what we need to see now is more of a confirmation, because what we do expect is right now the momentum is strong. So we need the price to break down. And once it breaks down, and any potential level of supply that is created over here will probably lead to more shorting in this index. But if the market is strong and continues to move, then we might even see a momentum to the upside. So a potential change in the trend and the momentum will probably initiate fresh shorts. So just watch out for confirmation entries on Fin Nifty. Let's look at some of the key stocks for the week. We have two stocks, but before that, let's quickly cover USD INR. All right, so let's start with the monthly chart for USD INR. And when we look at the monthly chart, let's put the monthly chart here. Yes, so this is pretty much breaking down or trying to break down. If any moment in time, if the price of the USD INR starts to move down, then we might see a little bit of an upside momentum. But in case if USD INR tends to consolidate and starts to move to the upside, then we might see a little bit of a downside momentum on the Nifty index. All right, let's move on to the weekly chart. On the weekly chart, we are seeing a little bit of a consolidation and a move to the upside. So that may not be a good news for the indices. Let's move on to the daily chart. And on the daily chart also, we are seeing a potential base rally, right? So what is going to be key on Monday is to probably get a gap up above this area, which will probably induce new levels of demand on the USD INR. And right now you can see this demand zone is being played out, and you might potentially see the prices doing something like this, maybe doing something like this, forming an arrow, and then might just continue to move up. Okay, so this is what we are expecting the USD INR to do in the coming week. Let's move on to stocks now. Let's look at State Bank of India. State Bank of India will be announcing its earnings, so it will be crucial to just have a look at some of the key levels on State Bank of India. And then we'll also move on to L&T. All right, so let's start with the monthly chart for State Bank of India. State Bank of India on the monthly chart is more or less behaving like Bank Nifty, right? Respecting the level of monthly demand and moving and trying to inch to the upside. So I believe that it still has some more room to move to the upside. And if you look at, let's say the 60-minute chart, there is one level of supply here, which one needs to watch out for. And that is the level of supply where earnings can come a little bit into play. So let's quickly mark that level over here. So this is that supply zone. I'm going to try and plot this here. I'm going to plot the supply zone from here up to here. This is the area to watch out for, 593 to 598. And if you look at the level of demand, there are two levels of demand here. There is one level of demand over here, which is this rally-based rally. Seems to be a good, and then just below that, you have another rally-based rally. Right? So these are the two key levels of demand. And those who are playing in an earnings strategy can just watch out for these two levels in the upcoming week for State Bank of India. Let's have a look at L&T. Now, L&T has been one of the weak stocks. So prices have drastically corrected, but now we are coming into this level of monthly demand. Not a very, very good structure, because probably the best level is sitting right here, and prices could just easily cut through this area and come into this 1936,779 level. So this level looks a good level in terms of the long term, but let's move on and look at it more trader specific. So let's go to the weekly chart, and just imagine on the weekly chart, this is all that you see, right? So this is not really good. And there is a level of demand over here, 2045 to 1971. Let's see if we see something on the daily chart. So on the daily chart, there is a level. Actually, it's more evident on the 240-minute chart. Let's go to the 240-minute chart and just mark that level. Yeah. So this is that level, which is 2178 to 2149. And now we just got to be a little careful about this level as well, because this has formed a new level of supply. So preferably, the way I would look at it, I would expect the prices to go down here first. And I may not be just taking this trade as a set and forget it trade, but probably I'll just wait to see some kind of a confirmation coming out of this level of demand. And if the prices do show me a level, or let's say some kind of a reversal pattern over here, then probably I can just drop down to a smaller time frame and possibly plan a trade there. So this is one level to watch out for, 2178 to 2149. Ideally, when price gets over here, I would probably not look at shorting L&T any longer. Okay, so just be careful with 2178, 2149. And there is one more level on the 1 hour chart of L&T to watch out for, which is this supply level. It's a little low on the curve right now because we've already come down way below. but still this level has some kind of a potential to play out, taking into consideration the 4-hour level of demand is somewhere over here, right? So in case if prices gap up into this area, 2240, 2261, we would expect the prices to do something like this, hit this area, and then come to the 4-hour level. Okay, so this can also be a potential trade setup for Monday. All right, everyone. Thank you very much for watching this week's weekly view video. I hope you enjoyed the analysis. If you do like this analysis, please do hit the subscription button for the Sher Khan Education channel. And at the same time, please do not forget to give your valuable comments in the comment box. Take care, everyone. Have a lovely trading week. See you all next week. Bye-bye.
This should not be treated as a recommendation. Please conduct your own analysis or consult a financial advisor before investing.